Good morning. Welcome to Market Mashup, our weekly recap of financial markets and what we have in store for this upcoming week that might impact your stocks and bonds. I'm Scott Nasca, president of Generation Capital Management. Tough week in the markets last week as the Dow Jones was down 1.6%, S&P 500 down 2.4%, and the Nasdaq was down 3.2%. So a pretty aggressive sell-off in all markets last week. A lot of skittishness right now with investors regarding inflation news as well as geopolitical risks that are out there as well, with the skirmishes in the Middle East now that might expand into a larger scale issue. Looking at the bond front, we have the 2-year at 5.10%, the 10-year at 4.95%, so a 15 basis point inversion. A significantly lower spread now than it was just earlier this year when we had this rate change between the two at over 1%. Still inverted, but we've seen a big move in the 10-year or the longer end of the curve. So the inversion has shrunk because the longer end of the curve has moved up substantially, almost over 1% in the last 3 months. So it's a big move. When you see this type of move on the longer end, it's not good for bond investments as a whole, as many of the indices out there have exposure to the longer end, and that type of move higher does produce price drops in terms of the individual bonds and lower performance overall. A couple commodity figures to bring out. We have oil at $88 a barrel and gold at $19.93. So, still elevated levels here, especially on oil, which is not good for the inflation front. So there's a lot of cross currents going out there right now. And more recently, a lot of negative news that the market's becoming a little bit more defensive, people taking money off the table, and we're starting to see it show through the indices out there. We do have some data points coming up. We have new home sales on Wednesday. We have another Q3 2023 GDP number coming out on Thursday. And then we have September PCE inflation on Friday. There's a lot of earnings calls coming out this week, especially on the tech side. We have Microsoft, Alphabet, Meta, which is Facebook, and Amazon all coming out, in addition to Coca-Cola and Exxon. We have staples, we have oil coming out, and then the big tech and consumer discretionary sections coming out right now. So pay attention to this. I keep on saying that, but you want to see if any of these companies are giving you guidance going forward, if they're seeing any slowdowns in consumer spending or in business spending out there. Microsoft, Google, Meta, and Amazon will be ones that the marketer is going to pay attention to. And if we see any signs of hesitancy or nervousness with those companies, it's going to be tough sledding for markets overall. So put those on your radar for this upcoming week. If you have any questions, feel free to reach out to us, www.gencapmgmt.com. Our team is ready to answer any questions that you might have. Give your portfolio a second opinion. Make sure that your allocations align with your risk tolerances and goals and objectives, especially in this environment right now with the volatility that we're seeing out there. We have a lot of good articles out there. John's Top Tips continues to be very popular for people who are looking for financial planning advice. Feel free to reach out to us. Once again, my name is Scott Nasca, president of Generation Capital Management, and this is Market Mashup. Have a great week, everyone.